Well, let's have a quick check-in now on how markets in Namibia are performing and what we've seen on the day. Checking in on the overall index, 984 points, almost 985 points for the overall market. And just a look at how the local index has performed for the day, sitting slightly into the red, but pretty much flat as it stands, 279 points. And a check-in on how the Namibian dollar is faring today, 88.88 against the US dollar. And as you can see, around 0.4% stronger against the greenback today. Well, let's cross over to NBC, our NBC studios in Windhoek. Rudolf Kuschke, analyst at Simonis Storm Securities, is standing by. Rudolf, thanks so much for joining us today. So you've just released your quarterly report for your views on the Namibian economy and the global context, and also looking at asset allocation right now. Your views of rotating into cyclicals still stand, but overall, any changes specifically in how you view markets going forward in Namibia right now?
Hi Samantha. Yeah, I think one of the things that changed from a previous strategy or from a previous report was that the Q3 GDP numbers for Namibia came out relatively weak, below expectations, and we consequently downgraded our growth forecast for 2012 to 4.7, down from 5%, although keeping the GDP growth forecast for 2013 unchanged at 4.2% at this point.
Mm-hmm. So basically, so that of course would indicate a slightly less buoyant growth picture for this year. Does that change your investment thesis and what you're looking at in terms of key stocks that are likely to show good returns this year?
Yeah, I think on the stock selection aspect of things, we tend to look more outwards. I mean, to the more bigger economies. They are the ones that obviously influence our stock markets the most, and so in that sense, I guess we looked at the buoyant Chinese economy recovering nice and strong in Q4, releasing those 7.8% GDP growth figures, and yeah, basically just reinforcing our view that we like resources. I mean, the Chinese economy growing will be good for demand on that side. And then also the weaker rand that we've seen over the last couple of months, that should bode well as well for the resources, and maybe resulting in a few positive earnings surprises for those companies that earn in US dollars.
Which ones stand out for you right now when it comes to the companies that could potentially, in fact, benefit from the weaker rand?
I think in the resource space, we like Anglo American still at this point. I think there's some value left for the stock, although it has seen some issues in the last couple of months. I think there's some value left. Like I said, the weaker rand hopefully causing for some positive earnings surprises there. Still a very good company with a strong project pipeline. Some changes at the top level of management. Hopefully also doing good for the company going forward. One of the other stocks that we kind of like is Old Mutual in the life insurance space. I think the equity market rally that we saw towards the end of 2012, towards the 40,000 level on the JSE, will do good for the earnings that will be released in, I guess, the next month or so. So Old Mutual we like also because of the relatively cheap price that it's trading at. I think it's trading at about 14 or 15% below enterprise value, and relative to the peers in its group, it's relatively cheap.
Mm-hmm. Let's talk about the fixed income space, because one of the hot topics at the moment is a rotation out of fixed income and, of course, fixed income assets and bonds into equities. Have you started to see yields rise at all in Namibia like we've started to see in the developed world?
No, we haven't seen that on this side, I guess. I guess our view, we also like to subscribe to the view of a switch into equities and out of fixed income. But yeah, on this side, we haven't really seen that movement yet. I think there could be some upside left to bonds, both in South Africa and in Namibia, just due to the big or to the large yield differential that still exists between us and the developed economies. So I think once the labor issues settle down, that could actually see some upside left in the bonds. Although on a 12-month basis, I would see the bonds slightly weaker from these levels.
Mm-hmm. Looking at government debt issuance, though, I mean, could constrained supply be an issue and help support bond prices? Because those January debt figures coming out today and showing a slowdown once again in issuance. So to what extent is the slowdown going to persist? I mean, on a relative basis, how important is it? And do you think that could help prop up prices to some degree?
I think you're right. We have seen slow issuance. The government's not in dire need of cash at the moment, as we've seen. And 2011 saw extremely aggressive domestic debt issuance from the government to the point of where it stands at about 15% of GDP at the moment. And it seems like the government is just looking to keep it at these levels for the moment. So going forward, I see slow issuance continuing definitely, and like you said, I think some support will definitely be lent by this to prices.